I'm going to get two graphs up right now. First, QGLP, a thesis or a theorem which we've discussed with Raamdeo ji time and again. But there's something very interesting which we've discussed and we don't talk about it, which is that a great business multiplied by a bad management is zero, and a great management multiplied by a bad business is also zero. That is the importance I think Buffett is also talking about in the newsletter. If India is becoming more like an asset class now, because globally everything is in shambles, why have Indian markets not given any return? At least the index has not given any return from last 16, 17 months now.
Now, after talking for very long term, now you come down to a few months.
That's my job.
So no, it happens. I mean, if you examine 16 months before that, you had a bumper return. So obviously it was way away. So there's always reversion to mean, and the stocks cannot fly. You are already trading at almost, you're the most expensive emerging market. You are trading at upper end of your own valuation at about 20, 21 PE. So once the earnings growth pick up, nothing is going to stop, I'm telling you. Once, for some reason, the earnings in this quarter you might have seen, except for financials, everything else was, you had the top line of 15-20%, but bottom line was flat or negative, because the margin compression is very high. Inflationary pressure on the cost side is not able to pass it on. So I think something will change. Maybe companies will be able to price it as we go forward. Inflationary pressure goes down all over the world. So we are able to pass on, and say, like you see the commodity companies, they had bumper profits last year. Now their profits are subdued. So I think the user of the commodity, I hope, will be able to price it and pass on to the consumers and improve their margins. So I don't know what dynamics will work, but right now, as we look at things, I think Q4 results are also not going to be very different than Q3. So margin, once the earnings explosion come, see, we have about 825, 830 rupees EPS for Nifty, TTL, and that valuation is about 17,000, so about 20 times.
That's trailing, but
I always look at trailing because that's the only truth.
That's in the price.
Rest all is estimated and can go haywire. Now next year, our guys are still at 950, but I don't think market is expecting 950, because if it is 950 or let's say closer to 960, 970, then market would have been far more buoyant. So as the market gets confidence on next year's earnings growth, I think market will, I don't think it is going to wait whether if I sell, they buy, market will just blast. India's 75-year history, you see, it has been slowly, steadily, like an elephant, it has been moving up. Okay, with all the challenges, they have just kept on moving, kabhi 4%, kabhi 6%, kabhi 8%, 9% also we touched. But on the whole, we have been doing well, and markets have also kept track. Now, the country which has the longest, I think one of the longest compounded past, now my sense is we are going to have next 25 years of compounded future. Now, what does that mean? India, as we stand today, we are talking about 10 to 11% kind of a nominal GDP growth rate. Because ultimately on a 270, 280 lakh crores GDP, we are talking about almost 30 lakh crores, 28, 29 lakh crores of additional GDP this year. On that you have a 10% compounding every year.